Hey guys, my name is Jason. I am the founder of Distress Loan Advisors. If you want to book a consultation with me, you can go to jasontees.com. You can Google Distress Loan Advisors and the name Jason. Also, there is a link in the notes below. All right, today we're going to talk about the SBA offer and compromise. And to start, if you've got an EIDL loan as of today, I think it's March 6th, 2025, to my knowledge, the SBA has not approved an offer and compromise for any EIDL loans, despite the fact that they are sending out the paperwork. Despite that, I'm going to do a whole video on offer and compromise, how it works, key facets. So I jotted down 10 bullet points. I could talk for hours about offer and compromise because I've been doing it for 15 years as a consultant. And so if you've got a 7A loan that you want to settle, it's going to be very relevant. If you've got an EIDL loan, it could be helpful should they introduce the concept of offer and compromise at some point. So here we go. First things first, offer and compromise. In order to be eligible for an offer and compromise, there's a couple of prerequisites. One, the business needs to have ceased operations. So you don't necessarily have to have dissolved the entity, but you can't be operating anymore. And two, the assets of the business need to be sold. So that can come in the form of just like a liquidation sale. So if you just do an asset sale to, let's say you have a pizzeria and the guy down the block wants to buy your equipment or take over the space and buy your equipment, you could do that. You can also sell the business as a going concern. And the SBA is fine with that as well, because generally you're going to get more money when you sell the business as a whole, as opposed to a forced liquidation or through an auctioneer or something like that. So one way or the other, the assets need to be sold and the business needs to be closed. Keep in mind, any asset sale or sale of the business would require the SBA to sign off on it because they do have a security interest in those assets, and selling them without their permission could be construed as fraudulent. So make sure if you do sell assets or you sell the business, you get the SBA's approval. Next, in order for an offer and compromise to be approved, this is particular with 7A loans, people often ask, well, who am I dealing with here, the bank or the SBA? And the answer is kind of both. If you've got a 7A loan and the bank is continuing to service the loan, what'll happen is the bank reviews it and the SBA requires that they be willing to recommend it for approval, but they can't sign off on it 100% by themselves. So the cooperating bank sends it to the SBA, who makes the final decision. So if you've got a 7A loan, you need both the bank and the SBA to be on board, but the SBA gets the final say. So if the bank recommends it for approval and the SBA says no, no deal. For EIDL loans, if and when that happens, it's going to be directly with the SBA because they issued the loans directly. Next, what paperwork would you expect to need? Again, this is based on all the 7As that I've settled. Generally speaking, here's what the SBA requires: a personal financial statement, and they have a specific one for offer and compromise. Then they've got the actual offer and compromise form, which is SBA Form 1150. They ask for 2 years of tax returns, 2 months of bank statements, last 2 pay stubs. Those are the general prerequisites. And then there's other consent forms you have to sign. You have to give them an IRS verification so they can double check that the tax returns that you're giving them have actually been filed. And then sometimes banks will ask for additional things, but what I gave you is generally what the SBA asks for. So they do require full financial disclosure. As I always tell my clients, it's like reapplying for the loan all over again, except now you're trying to prove to them that you can't pay. So they really do get pretty deep into the weeds on, what assets do you have? Who else do you owe money to? What's your income? What are your expenses? Because they want their pound of flesh. They're not negotiating settlements for the sake of negotiating settlements. They only really will consider a settlement if it can be demonstrated that the offer that you're making represents the most that you can afford, and from their perspective represents the most that they could even get. Let's say if they sued you and tried to come after your assets, that's what we're looking for. That's the equilibrium, so to speak, where they're indifferent as to whether or not they sue you or take your offer. Obviously the offer makes their life easier. So if they analyze your finances and say, well, we think Jason can come up with $100,000, and I go in with an offer of 95 and they say, well, if we sue Jason, we wouldn't get any more than that, then in theory, they should be willing to consider it. Next, if your home is pledged, and again, this is largely for 7A loans because EIDL, most homes were not pledged. I've only heard of one instance and it looks like it was an accident. But in general, if your home is pledged as collateral, some banks will say, oh, all assets need to be sold, so you need to sell your home. That is not true. I have done lots of offers in compromise over the last 15 years that included the release of a lien on someone's home. So essentially what we do is, as part of the offer, we say in exchange for X number of dollars, we want A, for our guarantors to be released, and B, for the lien that the bank has on the home to be released as well. Now keep in mind, if your home is pledged and there's a lot of equity in it, that is going to be factored into the offer amount. So like in 2008, when all the home values dropped, that was no problem for us. Like out in California, home prices dropped by 50%. So there was really no value there. And so it was easy to get the homes released. These days, homes that have a lot of equity, it can be very expensive to try to settle. Next, the $1 million question: how much will it take to settle? And the answer is, it really depends. It depends on so many factors, but primarily it's your finances. And so they're not targeting a specific percentage. They certainly have floors, like there's a minimum that they'll take regardless of your circumstances, but they're not going to arbitrarily say, well, we'll take 20%, regardless of your circumstances. If they think you could pay it in full, they won't be willing to consider any settlement at all. So the amount they're willing to settle for, there's unfortunately no specific formula. The way I do it is I look at the personal financial statement, and depending on what the asset is, we have to figure out what do we think you could come up with based on your circumstances, and what do we think the SBA is going to be concerned about based on your circumstances. So there's some nuance to it. I mean, honestly, that's why I have a consulting firm, because it's not as simple as just an arbitrary percentage or something like that. Next, how long does offer and compromise take? I tell my clients you can count on somewhere between 4 and 8 months. It takes a really long time because first, again, with a 7A loan, if it goes to your lender, it kicks around. It has to go to somebody's boss or the boss's boss or some sort of committee. Sometimes they have questions. Sometimes they counteroffer. Sometimes they ask for additional information. So all that back and forth. Usually with the bank, I would say 2 to 3 months, and then if the bank is willing to recommend it, then it goes over to the SBA, where you get at the end of the line and you wait for them to make a decision. And how long the SBA takes, it really depends on what their current workload is. So, during times when they've got a lot of offers, it takes longer. And sometimes we'll get an answer within a couple of weeks. Sometimes it's a couple of months. You just never know. And, because it's the federal government, you can't fight City Hall. You kind of just have to sit and wait. There's really not much that can be done to move them along. Next, one offer per guarantor, which means if you have a business partner who is not your spouse, then if there is a settlement offer to be made, then each partner will have to make their own offer, and it really should be reflective of their own finances. So in other words, let's say I had $1 million loan and I had a partner named Joe Smith. They will not allow me to go to them and say, hey, I'm making an offer on my half of the $1 million. So really I'm negotiating on $500,000 and I'm going to offer you $100,000. The way the SBA looks at it is you are responsible for 100% of it, which means if Joe Smith has $1 million, they're not going to just say, well, we'll just take your half, Joe. Each of you is responsible for all of it. And so if collectively you can pay off the loan, there's really no settlement to be had. If collectively you can't, each of you needs to make your own offer. And in almost every case, the offers are different because most financial situations are not identical. So you won't be able to make a group offer. You can certainly simultaneously make offers, but you can't do a single offer from the group. 1099s. This is a question that's come up a lot. I can tell you the lender that I used to work for, even we were confused as to, who do we send them to and when. But as best I can recall, what they told us was the borrower should get a 1099, not the guarantors. But again, we were pretty clueless. But what would happen would be at the end of the year, we would have a spreadsheet of any loan that was settled, and the remaining amount, in theory, should have got a 1099 sent to the borrower, and then depending on what the corporate structure was, maybe it would have some tax impact, but I don't believe it should go to guarantors, and the reason I say that is, what would happen if you've got 10 different guarantors and one of them settled? Who's getting a 1099? They can't all get 1099s for the same loan. That wouldn't make any sense, because if you owed $1 million, they can't send a 1099 to 10 different people, because now they're collecting taxes on $1 million forgiveness, which that's taxes on $10 million, so it wouldn't make sense. Number 9. Sorry, I have 10. Approval documentation. This is where it's kind of funky. In most cases, believe it or not, there are no formal settlement agreements. Most of the time what happens is we send in our offer, and then the SBA sends back their basically form letter that says we've approved it, needs to be paid within this many days, and that's it. Every once in a while I'll have a bank that will draft a settlement agreement, but the majority of them that I've dealt with essentially say, no, you're not getting anything else. It's just this approval letter. The good news is I've never had any issues with that. I certainly always go back to the bank and just say, you guys are okay with this too, and upon receipt, you're going to do whatever was required. So in other words, if I asked for my house to be released as part of this offer, I just want to confirm that once I make this payment, that you will do that. And again, I've never had a problem with that, but out of an abundance of caution, I always just ask to make sure that the left hand and the right hand are in coordination. In other words, the SBA approves certain terms, I always confirm with the bank, yes, you agree to those terms as well. And finally, the last thing is, if you do an offer in compromise, just keep in mind you will not be eligible for future SBA loans or other government programs like FHA loans or federally subsidized student loans. Essentially, if they lose money on you, they'll do it once, but they won't do it twice. So depending on how much you owe, it probably is not going to be a factor for you. But if you owe them $25,000 or $50,000, and at some point down the road you think you might want to try to do another SBA loan, it's something to consider. If the experience of being a business owner has scarred you enough that you're pretty sure you're never going to take another SBA loan, you live with it, fine, I won't be eligible for SBA loans, but keep in mind that you could still borrow from conventional lenders. It's just SBA programs specifically. Which reminds me of one more thing, last point. It definitely could impact your credit. I've seen banks and the SBA both report SBA loans even after they've been settled as basically settled for less than the full balance, even if they weren't previously reporting them to credit. So it could have a credit impact. In a lot of cases, they don't report it, but it is possible that they do. So again, if you care most about your credit, just keep that in mind if you're going to try to negotiate an offer in compromise. So that's it. Those are some basic parameters of the SBA offer in compromise. If anyone out there has got a 7A loan and they're interested in settling, that has primarily been my business for 15 years. If you've got an EIDL loan, I'm not going to be able to help you with an offer in compromise yet, hopefully. But the consultations that I mostly do with people is around, well, I can't pay, so now what happens, or what are my options? So that's it. Thank you for checking in. And I just want to say one more thing, that I really appreciate you guys in general. Everyone that I talk to always says that, they like the formats of my videos, and I try to be pretty succinct without wasting people's time. And I definitely don't want to be known as the type of guy that upsells. And everyone mentions that they feel comfortable with this format. So thank you. I appreciate the support, and I appreciate everybody who books time with me, because obviously this is how I make a living. So it's certainly a quid pro quo that a lot of people are taking advantage of these videos and learning a lot. Obviously, it's a small portion that book consultations, but for those of you who do, I really do appreciate it. So thank you. All right, that's it. I'll see you on the next one.